Mr. Kennedy, you are welcome to the school. Can you please drop the chat? Mr. Kennedy, you can hear me, please drop the chat. Okay. 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 Oh, that will be network. That will be a network problem. Okay. Can let me switch my network. Let's see if it's going to be better. Let me switch network. Okay. I just hope this will be better. Okay. Is it better now? I've unmuted you. You can say, yeah. Is it better now? Can you hear me? Is the line still breaking or is it okay now?
It's very okay now.
It's very okay now.
Yeah, it's very clear.
Okay, and that's thank God for that. So I just believe this will help us to throughout the class. Okay. If you look at your syllabus, yeah, welcome to class, Temitope. So we are starting the class now. Now, if we look at the syllabus, what we have done so far, we have actually done 95% of your course study. We are only left with two topics, which is a standard and a topic, IS 8, changes in accounting equation, in accounting policy, estimates, and useful and corrections of errors. Those are the IS 8. And also we have another topic that we have not talked about. The other topic that we have not talked about is the cash flow statement. We want to talk about the where money comes in and the inflow and the outflow of the company. So there are the two things that we always talk about. So this time around, we'll be talking about, so because of the peculiarity of IAS 16, which talk about the property, plant, and equipment, we'll be talking, we'll just solve two questions more on it so that we can get it better. Because if you look at the way your syllabus is structured, you notice that 20% actually allocated towards IAS 16. So I want to solve two questions, part for 2018 and one for 2017. And even last night also, the last exam that they did, they tested IAS 16. So probability of you meeting IAS 16 in the exam is 60 to 70%. So I'm going to do a recap there. So next week, we talk about the IAS 8 and also talk about cash flow statements. So let's go. If you have any question, please, this will be a best opportunity for you to ask your question because this is another opportunity for you to see how IAS 16 are being handled. At the same time, if we have prepared or if we have practiced a question before on IAS 16 and it was unclear, I believe is also an avenue for you to clear your doubts. to know areas in which you have make mistake. So IS16 is all about property, plant, and equipment. IS16 is about how we value non-current assets. That is IS16. So IS16 defines some concept like it defines what we call depreciation, like a systematic allocation of what allocation of assets, allocation of cost on a yearly basis. That's what depreciation talk about. They talk about carrying amount. That carrying amount is all about the cost less accumulated depreciation. It means the cost of the asset in the books of the owner. That's carrying amount, which means that at the particular date, what is the amount that you can sell off or dispose of the asset. They also we now talk about we will talk about that we have two formulas in which we can use to value our that's okay. That one is inventory. Sorry, I'm missing inventory. Okay, so we talk about for cost. Before we can get our cost, we need to what? We need to add all the costs together, all the related activities to make that will make us achieve the purpose why we purchase the asset in every provision incur to make sure that the asset is ready for use will be added together, and the addition of everything will give us the total cost that we are going to use to value our asset. To value our asset. Then we also mentioned that we have to what we call the market value for this asset is 20,000, overstated as a loss to reduce as an expense to reduce their profit. But if it's surplus, it's going to take to what to your profit. What you need to know is the cost. Okay, we mentioned types of depreciation. We said we have straight line depreciation, we have reducing balance depreciation, we have production unit depreciation, we have some of the depreciation, and where you will look at the formula under the IS16 as well. So now I will also look at so that the things that we look at when we purchase an asset, initial measurement, how we measure the initial asset that we purchase. We talk about subsequent measurement. It means that okay, year in, year out. That's where the depreciation comes in, accumulated depreciation comes in. Whenever there is year in, year out, okay, what are the things that how do you record your asset over time? Then we have what we call disposal, the recognition of asset, which means that the asset is no longer what you want to remove it from your book. How do you remove it? We talk about disposal. And now then we say that under disposal also, there's what we call full disposal and part disposal, part exchange disposal. Full disposal means that you give out your asset to collect cash, while part exchange disposal means that instead of you to collect gas, you bargain the asset in a new asset to be purchased. Just like you have a car right now, and the car, okay, you now want to buy another car. You now we go to the dealer. Okay, I'll pay you 200,000 with my car. So you are matching 200,000. It means the word is is part exchange iPhone 10 and you want to move to iPhone 11, you want iPhone 11, so we avoid the market value. Okay, your iPhone 10 can only be valued like 1,000. You need to bring 300,000 naira to it so that it can match up to example of part exchange disposal. And we look at the accounting technologies. Then we talk about disclosure as well. That the accounting, the standard require us to disclose some particular thing. And what are the things that he asks us to disclose? He asks us to disclose some example of what he asks us to disclose is number one, the rates, the rate. Number two, the model that we have adopted. Number three, the addiction. Number four, the disposal. These are the examples of what he have actually what asked us to disclose are the input that we have adopted using the word using hiring amount also must be disclosed. He must see it, and that will be this disclosure will come under the note to the account. So we solve, I think we solve like a one question or two questions on that. And this time around, so I want to solve like two questions on IS 16 as well, so that we're able to what understand it. One actually what one is talking about the part disposal, while the other one is talking about full disposal. So we are looking at the two together today. So let's look at question one. What question one says that the following information was extracted. So we are now doing the question now. So we are doing the question. I say that the question one, the following information was extracted from the book of Super Limited as at 1st July 2015. Okay. So Super Limited, then we extract from figures from there. We extracted property at cost 6 million. They are giving us a cost, not a carrying amount, please. A carrying amount is what is the value, is the cost less accumulated depreciation. So property at cost 6 million, machinery at cost, motor vehicle at Okay, we're back. Sorry about the network connection. So we have switched to another network now. So making it third critical network of pray. The rain, I know the rain actually disturb a lot to make affect it, but we pray that we have a stable one. The third one should be okay. So please, if we have, if we have any issue with my delivery, if we are noticing that we okay, okay, okay. Apologies for that space. Apologies for the network. Apologies for the network again. So let's continue with the class. I just pray that everything just stable, normalize. So we have it to be so addition of plants. We have plants which cause so they dispose plants as well. So the third information given to us is that the company brought a new car costing 61,000 and was given in a part exchange allowance against an old car at the value of 15,871. The car B part exchange ordinary cost 55,548 naira, 548 naira, and add an accumulated depreciation of 39,536 naira. Now, this question 3 is the part exchange that are actually what I explained. It means that they are trying to buy a new car, but they negotiated the old car alongside with the purchase of the new car. So what that we call part exchange. The way we treat it also is different. Okay, so following on, we have what we call depreciation is charged at the following rate. So we have depreciation is charged at the following. We have the property to 2%. We have the using straight line. We have the plant 20% using straight line, and we have the motor vehicle, which is 25% per annum, reducing balance. So that one is different from what from the property and plant. Okay, we play the gain or loss on disposal of plants and the old car. So we are required to calculate either there's a gain or loss on the disposal of the plants and the old car. So until there's a disposal on an asset, we don't know there's no gain or loss will not exist. But once they dispose of an asset, you must calculate the gain or the loss. So now let's calculate it. And the formula for calculating gain or loss is just the the proceeds minus the cost carrying amount. The sales proceeds minus the carrying amount, and the carrying amount is the cost minus accumulated depreciation of the disposed assets. It means that what I'm saying this is that if I have disposed of an asset of 20,000 naira, that's my the money I collected on that asset that I disposed of is 20,000 naira. Then okay, fine. If I dispose that of 20,000 naira, okay, what is the cost? What is the cost of the asset himself? What is the amount that I recognize it in my book, in my record, at that moment I dispose it? That's what we call the carrying amount. So I will say what is the carrying amount of the asset in my book. So I will now minus it. The difference there will not be gain or loss. So now to get our carrying amount, I'm repeating that again, is our formula for calculating carrying amount is actually is what sales proceed minus sales proceed minus carrying amount. Sorry, sales proceed minus accumulated depreciation will give us carrying amount. Sales proceed, sales proceed, sales proceed. Let me just repeat myself again. Sorry about that. To get your gain or loss, that's sales proceed minus your carrying amount. Now, to get your carrying amount is cost minus accumulated depreciation. Okay. Now, after that being said, let's look at one. See, IA1 says that we should calculate the gain. So, gain or loss on disposal of assets. So, let's calculate that gain or loss on disposal of assets. So, we have, see, so we have this gain or loss on the after. So, firstly, I said we are going to start with the cost. Sales proceed, which means the amount that we receive that we get on the what on disposal of the asset. So if we look at the question here, the sales proceed given to us, we are calculating for plant is this. The information on plant is this. This is the if we look at the additional information 2, the information 2 is what we are going to use to calculate our gain or loss on plants. So based on this, the cost is what? The cost of that plant is 415,500. Why the accumulated depreciation is 2,993. Now was sold for how much? 129. So that amount of 129 is the sales proceed. 129 is the sales proceed. So we go back to our equation. Then we now put that 129 to be what? To be the sales proceed. So we come back here and put okay, sales proceed will now be sales proceed, that's 129,000. What are we using this? We have to less it. Now less what? Less carrying amount. How am I saying closing stock? Less carrying amount. Okay, now that we have the carrying amount, we have to what is the carry? How do you get our carrying amount? Carrying amount is cost minus accumulated depreciation. That's it. Cost minus accumulated depreciation. Well, so what is the cost? What is the cost given to us? The cost given to us is what? 415,500. 415,000. So we come back here and put 400 and what? 15,000. 415,500. What is our accumulated depreciation? Because we want to less it. So we put that one with what? It will be in bracket. You are lessing it's going to be in bracket. And what is the figure of our accumulated depreciation? Is what? Is 293,000. 293,000. So we put 293,000. So we put 293,000. That's that. It means that what we have done is we have been able to ascertain the information that we have. So we now press our calculator to get the difference. So the difference there is what is the cost of sales. Is the cost of sales. So we have 415,500 minus 293. That will give us total of 122,500. So our carrying cost will be 122,500. And remember, we are using it to what? To reduce. We are using it to reduce our sales proceeds. So because we have put less carrying amount there, we will not put brackets. So, but at the same time, to also be on the safer side so that it won't convince you that how do we arrive at that, I'll put bracket for you. So we have that. So let's do that. So I'm just putting a bracket there. In exam, you're not expected to put bracket. Okay, I'm putting bracket there. So better still, let us just remove this less. Let's remove this less there. Let's put I'll put it bracket like this. Because in mathematics, minus minus might actually give us plus. So let us just do it professional way. So we have 129,000 minus 122,500. So if we minus that, what that will give us what? 65. That's give us 65. And that 65, you see loss or gain. Is that 65 loss or gain? That's 65. Is it loss or gain? Okay. The 65 is going to be gain. Gain. And why is it gain? Because the sales proceed is higher than the carrying amount. It means that we have valued the asset to be 122,500, but actually we were able to what to generate a 129,000 naira from the asset. So it means that we have generated gain. We have earned more than the amount that we thought the value, the asset worth. That's why it's gain. So now on this one, car on asset, so we have that. So there's no sales proceed there. There's no sales proceed. They didn't give us sales proceed. Well, but they gave us what we can use as sales proceed. They gave us the value of the old car. The value of the old car, which means the market at the market negotiation is 15,871. They gave us that figure. Are you with me? So the sales proceed is based on what? Market negotiation. So which means that fair value, arm's length, transaction done at the arm's length. So now there's no sales value. If they don't give you sales value, but they have given you the value of the asset, you can also use that to calculate if there's a gain or loss on the disposal of the asset. Okay, now after establish that, we are from the question, we know that all we need to do is now to pick up our asset. So we got our asset. So we come back here, our old car for old car. We'll put car value. Old. Oh, what am I typing? Old car valued. Market value. What is the amount given to us? 15,871. 15,871. So our next thing is what? To determine our carrying amount, because we need to less our carrying amount from it. So let's determine our carrying amount. So how do you get our carrying amount? We have cost. After cost, we have accumulated depreciation. Now that we have that, what is the cost given to us? The cost given to us is 55,548. This is the cost. Can you see You can write it down. So this is where I'm picking my information from 3. So can you see? I'm not going to use the value of the new asset purchased. I'm going to use the value of the asset disposed, not the one asset purchased. So using 61,500 will be wrong because 61,500 is for new asset. So it's for acquiring a new car, not disposing of a car. So acquiring a new car is very wrong to use the figure used to acquire a new car against the cost that does not know. So if the acquiring of a new car, let's say the acquiring of a new car is Toyota, and you are letting go of or let's say you are letting go of Kia, and you are now using a cost and accumulated cost on Kia on the Toyota, it's not done. So you must use the value of the asset against the carrying amount of the same asset. So let's continue with this. So our accumulated depreciation will now be what? Our accumulated depreciation will be 39,536. So after we have that, so we are lessing that from it. We want to less that so that you can get our carrying amount. So let's less that. So if we less that, that will now give us what? A total sum of 16,000. So because we didn't put less carrying amount, so we put it in bracket 9. Now 16,000 is 012, 60,012. Now if we less these two together, if we do 15,871 minus 16,012, the figure that will give us is 411, and it will be in bracket. Why is it in bracket? Because the carrying amount is more than the what? The value of the market value of the old car. It's different from market value of the old car. So, and that is as a result of what? It means that you have lost. That bargain wasn't favorable to the organization. Or if favorable to the organization, we have to, this one will not be loss, not gain. It will be loss to the organization. Now, after we have established this, then if we give just workings, in the exam, if the one we have done before, if we are asked to prepare the accounts, how are you going to show it under your T format? I've explained earlier. So I'm going to explain now. I'm not going to show it because we are not required. If we look at your requirement 1, we are done with A. So if we look at the B says that show the disclosure under IAS 16. So we expect to show the disclosure under IAS 16. So I will show you that. But assuming you are asked to prepare T format, what we are going to do based on the gain and asset we have done is that we are going to open a disposal account. When you open a disposal account, you debit the cost of the asset, you credit the accumulated depreciation. Then the proceed also, you credit under that disposal account, you credit the disposal account with the proceed to know if it's gain or loss. If it's on the debit side, it is gain. If it's on the credit side, it is loss. And that loss or gain will be written down to the profit or loss account. That gain or loss will be written down to the profit or loss account. So if it's a loss, it will be under the expenses side. Or if it's what gain, it will be under the profit or the income side. It's going to be under the income side. Okay. Now, the B part says that IS2 inventory state that where are we? Okay, we are on this. Okay, we are A2. So A2 says, okay, show the disclosure under IAS 16 PPE in relation to the non-current asset. So I expect to show the disclosure. So let's see. The disclosure means that states the assets, the cost, the depreciation, and show us the carrying amount at the end of the period. At the end of the period, that's what we are told. We disclose it. Okay, so because we need space to make it eligible, let's press enter. Now we have it on a new sheet. Okay. Now that we have it on a new sheet, let's start. The first one that we are going to do is that we need to name it. Okay, let's do something like this. Okay, so I'm gonna delete this. I need this space. So I need to know the total assets that I have. So I'm going to list them out. I'm in the example, I want to work. I want to show the disclosure. So I first of all list out the asset. So number one, I'm looking, what are my assets that I have? I'll go to my question. I'll okay, what's the assets? Looking at here, I have three assets. I have number one, I have property. Number two, I have plant and machine. Number two, I have plant and machine. Number four, I have motor vehicle. So I come back to my workings, I list them out. So I call this property. So the next one I have is plant and machinery. So I call this plant and machinery. So this also, I need this column as well. I need it for what? My motor vehicle. I'll call it motor vehicle. So it means that every information that relates to motor vehicle will be found under this column. So I call it motor vehicle. Oh, sorry. That means that what at the end of the day, I want to know the total amount of money of asset that I have. Is this total that will now be showing, okay, what is the total asset I have? Okay, I have so asset. What is total asset that I have? So it will help us to identify. It's like a check balance. It's like a check on the what on the schedule. So what we are doing here, we are preparing what we call fixed asset schedule. That is the disclosure that is required by IAS 16. So now that I'm done with that, the next thing for me is not to do is now start with the cost. So I'll start with the cost. Cost. Now, since I'm starting with the cost, I need to have what we call my opening balance. So I have my opening balance. My opening balance. And that will be as at what? As at 01, 07, 15. That's my opening balance. Let me show you what I'm talking about here. If you look at the year, at the beginning of this date, 1st July 2015, they give us the what? The figure to be what? To be cost. So this figure that we have here is our opening balance. That is our opening balance. So now that we have established that this is our opening balance, it means that we are going to pick this figure and put it under our schedule. 6,204, 2,419,585,000. Okay. So now let's go back to our schedule. So now after that, I will now put the figure. I will put the figure here. That's 6 million. Please, this is the I can pass question. Your level. I'm talking so the reason why I'm begging it is to see how they can test the question. So we have 6 million. Another one they have with us 2 million. So we have this to be 2,419,000. Then after that, we have what we call the 585. Now, let's press our calculator to add it up together. So we add the three figures together. If we add the three figures together, what will it give you? So it gives us 9,004,000. That will give you the total. So the total cost of asset that we have at the beginning of the period is what? It's 9,004,000. Now that we have this, we now ask to have ourselves a question. Do we have any addition? Do we have any addition? Probably during the year, we purchase some assets. So we have addition. Okay. So at the beginning of the year, this is the asset that I have. Okay. Do you have any addition? And if you look at the question, we now ask ourselves, do we have any addition? Okay, yes, we have addition. The addition that we have one on what? On the PP, on the plants. We have one on plants. we have another one on the car. So there's an addition on plant and car, and the addition on plant is 231,000, while the addition on car is 61,500. So we move down to what our schedule and put addition. Okay, so after that we have this. We have our property to what to be known. So we're supposed is 0 there. We don't have anything there. So make it is 0. So we put the 0. So we put the 0. Then we move on. What again we have? Our P&E, property and machine. Yes, we do. We have what we purchase plant. So what is the value of the plant we purchased during the year? 231,000. Then we have move on again. Okay, motor vehicle. Yes, that's true. We purchased motor vehicle. By what is the cost of motor vehicle? We purchased at 61,500. So we put it as 1,500. After that, we now go to total. The addition of these two together will give us what? That's 0, 0. Okay, let's do it. Okay. That should be 292,500. Yeah. Please press calculator to confirm that, please. Thank you. So after we have the addition, what other thing that we need to take for a disposal? So, okay, do we have addition? Yes, we have addition. We have done that. Do we have disposal? Yes, we have disposal, because the cost that started with us is not the cost that end with us, because we have let go of some cost. So the related cost of the item disposed will be under this cost section to reduce the balance of the asset, to reduce the balance of the asset. So we have disposal. So let's have our disposal here. So we have disposal. So we have, okay, we don't have any disposal on property? No, we don't have. We put 0. We move on to the next one. On to the next. We have what? Plant and machinery. Okay, do we have disposal on plant and machinery? Yes, we have disposal on plant and machinery. Do you have disposal on motor vehicle? Yes, we have disposal on motor vehicle. Remember, sorry, excuse me. Plant and machinery, there's a disposal. That's why we calculate gain on it. Old car, there's also a disposal. That's why we calculated what? Loss on it. So now, what are we going to put there? We are going to put the cost related, please, not the carrying amount. So, not the carrying amount, is the cost of the asset that you are going to use to reduce the amount. So we have put bracket there. Now let's go to the question. We have what? Well, let's say our property, plants, okay, a cost of disposal was sold for what? No, this is the cost. Now, can you see? 415,500. That is the cost. Please don't pick this figure, okay? Or don't do 415,500 minus 293,000. Or I'll put the carrying amount there. Is wrong. All what we are putting there on that as the first section that we are working with is the cost of the asset. Is the cost of the asset. Okay, now that we know that the cost of this asset that was disposed of for the plant is 415,500. So we come here and put that figure there to be what? We put the figure will be 415,500. So we move on to the next one. So there's also a disposal on motor vehicle. What was that? What was the cost of disposal? 55,548. Now that we have that, let's add it together. Addition of this and this together will give us, that's 515,000 plus 55,548. That will give us total sum of what? Okay, that will give us a total of 471,048. So I've done that. So it means that what? I'm good to go. Any other information? If I have what we call reapportionment, probably I need to reapportion. Maybe during the year, they now notice that what they have actually taken under the plant is not for plant, it's for motor vehicle. It means that you have to reduce the plant and increase the motor vehicle. So if the value, let's say for example, it was later discovered that 20,000 naira that was added to the plant is not meant for the plant. It's meant for the motor vehicle. and they have added it before. What you are going to do is that we are going to put reclassification. Then under plant, you put bracket 20,000. Under motor vehicle, you now put 20,000, not bracket. So minus 20,000 plus 20,000 will give us 0, which means your total will not be 0. But this time around, they didn't give us anything such as the reclassification. So it means that we are done on this. So what the next thing is for us to have our balance. So it means that at the end of the year, that's closing balance. This is closing balance. It means that the closing balance as at is 01 slash, okay, sorry, 30, that should be end of the, not the beginning, June 2016. So the closing balance, the cost, this one will be 6 million. This one is going to, okay, so let's press calculator for this. So 2,419,000 plus 231,000 minus 415,500. That will give us a total amount of 2,234,500. That was going to give us. Then this one also, if we do 585,000 plus 61,500, that will give us 6 million. Okay, so that figure minus 55,548 will give us a total cost of 590,952. So we have our total to be what? Because of our time. So 8,825,452. Now that we have done that, so the next thing for us is now to what? To now move to our depreciation. So we have it to be our depreciation here. So we have depreciation. Okay. Now we have to what? The same way we started with our cost, in the same way we are going to deal with our depreciation as well. So we are going to have what we call the opening balance. As at what is there July 1st, 2015. So we have July 1st. 2015. Now that we have that, so for us to get this information, we need to go back to the question. So we come to the question now. This need, okay, so we are done with all this one, so we can just highlight it like that. Okay, so let's move on. Showing. Okay, so what's our opening figure? If you look at the question here, they gave us the balance here to use. They gave us accumulated depreciation. Can you see? This is our opening balance. This is our opening balance. So what I'm going to do here is we're going to leave this figure to be our opening balance. So we come back to our information here. So we have this to be what? To be top. And then after that, we have the figure is what? 1,200,000. That for property, we have 687,000. After that, we have the motor vehicle to be what? To be 210. So if we add the three together, to give us total 2,097,000. Okay, now we have that. The same way, do we have any idea? Do we have any disposer? We have what? We have the disposer. So we put the disposer there. What are the disposer that we have? That's the disposal on, you don't have any disposal here, so we put a figure, so we put 0. Do we have any disposal on plant and machinery? Yes, we have the disposal. So what is the associated depreciation for that disposal? So they will give us, if you look at the question, they will give us to it. Okay, so if you look at the question here, they gave us accumulated for plant to be 293,000. They give us this one to be 39,553. So we state that here. So this one will be what? Or total of, so we put in bracket because we are letting it, we are letting it go, 293,000. Okay. So this one is 30 what? 39,000. 39,536. So we have that figure here. So addition of the two together, we give us a total sum of, let's press a calculator, that 333,536. So we have that here. So another one there, after we are done with that, the next thing we have to do, depreciation for the year. You know, accumulated depreciation, it increases by what? By the depreciation for the year. What we have only assigned or allocated the depreciation for that period. But this time around, we want to do depreciation for the year. So for us to do that, let's come to workings. Let's come to a little workings here. So workings on depreciation. So the first one we have is property. And we are asked to use straight line method. What's formula for using straight line method? Is the cost carrying amount minus what? Minus the scrap value or disposal value or salvage value divided by the estimated useful life. Or they give us what? A percentage straight. So from the question, they give us what? Percentage to use. So from the percentage to use, they give us the property to be what? To be used. If you look at this for information 4 is stated there. It's stated there on information 4 that our property should be on 2%, our plant should be on 20%, motor vehicle should not be on a reducing balance of what? Of 25%. So if that's the case, we come back here and we do 2%, 20%, and 25% reducing balance. So we have this to be 2%, 2% times the what? The cost, the closing balance. It has to be the closing balance. This amount here, this amount is 6 million. That's what we are multiplying it. We are multiplying this with 6 million. The cost, the closing balance of the cost, that's 6 million. That's 6 million. Now, if you press your calculator, that will give you 2%. 1% will give you 1%. So that's 6. That's 6,000. 60,000. So 2% will give us 120,000. That should be 120,000. Okay, so I've done that one. We have plants and machinery. So under plant and machinery, we have to be 20%. So 20% on the what? On the cost. So what is the cost given to us? The cost that we have gotten at the end of the period is here. This is it. This is it. 2 million and what? If we are using straight line method, it will be 2,234,500. So if we press the calculator, that should give us 446,900. Can you see? Now, lastly, the calculation will now be, the next calculation that we have is going to be on motor vehicle. And we are told that motor vehicle should be on reducing balance. So if motor vehicle is going to be on the reducing balance, and reducing balance is what? Is the cost minus the accumulated depreciation. The carrying amount that we have there, we now multiply against it. We multiply the percentage given to us. But if it's for the straight line, what we are going to do is that we are going to do the cost divided by the useful life or the percentage given to us. Okay. Now, so let's do that. So we have what we need here is we need, firstly, we need the cost. So let's take the cost. We need the cost. What is the cost given to us? The cost that we are going to use here is 590. This is the cost that we are going to use. This cost here is what? Is 590. So we have that 590, 590,952. Then after that, we now have accumulated depreciation. What is our accumulated depreciation? We have that. What is our accumulated depreciation? Our accumulated depreciation is what? Is 210. It means that we have not charged for the year. We are trying to charge for the year. So we minus the opening award, the opening amount, which is 210 from it. Now, after we do that, okay, so the subtraction of these two will give us, oh, okay, so this now let me call your attention to this, please. This accumulated depreciation now is 210, right? But we have let go of this 39,500. So we need to reduce it by 39,536 because we have let go, we have disposed it. So we have to reduce it. Now, if you reduce it, the figure there is what we are going to use to reduce our 590. So the figure here will give us what? So let's put the figure here. Okay, so let's do 210,123 minus 39,536. So we have 170,464. So that is our amount that we are going to reduce, that we are reducing from it. So let's put that in bracket. So I'm going to remove that one in bracket. Okay, let's put that in bracket. So let's put that in another form of bracket, so you won't get it confused. Okay, so is the end result of that give us that. So after we have that, we are going to, so you now say, okay, if that's the case, what is the amount given to us here? So we should press the calculator, which is 590,000 minus 995 minus 590,952 minus 170,464. That gives us a total sum of 952. That's 420. 420, 488. That's the total amount that's going to give us. So this is the total amount of value that is available, the our carrying amount for that period. So what we are going to do next is we are going to multiply it. So we are going to multiply it by the 25% depreciation given to us. So if we multiply by 25% depreciation given to us, that will give us a total sum of, that's times 0.25. That's 105, 122. That's what a total sum of that, 105, 122. So now that we have the depreciation to be that amount, so we come back here. So we come back here and put depreciation for the year. So we put charge at the that's charge for the year. So let's put charge for the year. Charge for the year. So what this one, we don't have anything. Okay. No, we do, sorry. We do, and that's 120,000. It's an addition to it. So we let it go like that. This one, what do we have again? Okay, yes, we have that to be 446, 900. Okay, and this we have to be 105, 122. So now let's add them together. If we add them together, what will they give you? It will give you that will give us 672,022. So now that we have that, the next thing for us to now add up. So we now add up. So we now add, so to have our balance. So let's add up to have our balance, to have our closing balance. So we have our closing balance here. Closing balance. Our closing balance is that 30th of June 2016. So we have that to be that. So let's add up So the addition of this will give us a total sum of what? 100 and 100, that's 320. 320. That will be total of what's going to give us. So in that, okay. So it's going to give us that. Then this one also will give us a total. If we press the calculator, because of our time, so press the calculator, that will give you 293. Oh, sorry, 84. 840,900. Then if you press the calculator for this one, it will give us a total sum of 275,586. And the total sum here will give us the total sum of 2,436,000. 2,436,486. That's what you're going to give us. So now that we are done with that, so we know our closing balance, so we can go ahead and know our carrying amount. So we know our carrying amount. So our carrying amount is also is in two parts. We have carrying amount at the beginning. So we have carrying amount as at what? As at is of seventh. That's first of seventh, 2015. Then also we now have what we call the carrying amount. So for space purpose, let's bring this down. Then we now have carrying amount. So let's put this down. Okay, so we have carrying amount at the 16th of June 30. So we have 30 June 6. So that's the carrying amount there. So how do we get our carrying amount? The way we normally get our carrying amount is the cost. Cost minus the what? Minus the accumulated depreciation. So opening balance. So for us to get this one, it will now be 6 million. This opening balance here minus the opening balance of this what? Our depreciation. So it will be 6 million minus 1, 2. So then that will give us a total sum of what? 4,800. So we have that to be 4,800. So we come back here and put, so we have 6 minus, so that's 4,800. So we have 4,800 just for confirmation purpose. So after that, we move to the next one. That next one says 2,419,000 minus 68,687,000, and that will give us 1,732,000. So we move to the next one. The next one will give us a total sum of, that's 585,000 minus 210. That will give us a sum of 375,000. So we add the two together, the three together, we give us sum of 6,907,000. So now to get our closing amount, the current carried amount, it will not be the closing figure here, the closing balance here, minus the closing balance here. So that's what we're going to do. So the closing balance there minus the closing balance there is what we're going to do to get our equation. So now let's solve that. So this one will be 6 million minus 6 million minus 1,320,000. Sorry, I was calling thousand because in my calculator I've deleted those 3 zeros. So that will give up what? 4,680,000. Okay, so after we have that, the next one also will not be 2,234,000. The closing balance, we are picking the closing balance minus 840,900. That will give us a total of 1,393,600. Then we move to the last one. The last one, it says 590,952 minus 275,586. And that will give us 315,366. So that's the figure we are. So we add the three together, it will give us a total sum of one. That will give us 6,388,966. So that's the closing number. That's the disclosure that we are required to prepare. That's the disclosure that we are required to prepare. That's the disclosure we are required to prepare. So now let's move on to the next one. So so that's 8 marks. What we are just done there, just this table alone. This table alone that we are just seeing is what is 8 marks. It's 8 marks. So let's look at question C. So we are done with B. A2. Can you see? It's sorry, excuse 8 marks. Can you see 8 marks? It's 8 marks on its own. So let's look at B. B is testing the knowledge of IS2, and that's talked about the inventory state. IS2 inventory state that inventory should be valued at the lower of cost and net realizable value required. Explain cost and net realizable value. So how do you explain that in the example? What they are just trying to, what is the cost? What do you understand by cost? What do you understand by net realizable value? What cost? If you want to divide that, me, I'll personally define that as what? Cost consists of purchase price, conversion cost, and every other cost that relates to what? That will relate to the purchase and bringing the inventory to the point where it is what necessary for use. Or you can also say that what this comprises of cost of purchase, cost of conversion, and other costs incurred in bringing inventory to their what to their present location and what and destined condition. So it means that every cost that you have incurred to bring the inventory from the point of purchase down to the location and based on the condition in which you need them will be added together to form the cost of your inventory. But if they ask now, what is now the net realizable value? Net realizable value is now the what? This is the estimated selling price in the what ordinary cost of business. Less what? Less estimated cost. Less estimated cost that is necessary to make for sales. Less estimated cost or what? Completion. That's realizable cost. It means that the cost that you can realize from the what? From your asset, from your inventory. So net realizable value, it means the estimated of what? The sales cost. If you want to sell it off, less the estimated sales cost and other costs for completion. If we have done that, then the figure will now give us what? The net realizable value. And that standard now went higher for that. That's to say that if the lower, what you are going to use to value your inventory will now be the lower between the what? Between the cost and the net realizable value. Is the lower figure that you are going to use to value your inventory under your statement of financial position. And if you answer that, you have your 4 marks. 2 marks for cost, 2 marks for realizable value, nothing more, nothing less. The other one, they say that the step 2 method of arriving at cost of inventory. The standard actually gave us 2 methods. It gave us what we call the FIFO method, first in, first out, and the weighted average method. First in, first out. This means that what? That account is actually what is being recorded as what? Being that inventory are consumed as they are purchased. That's first in, first out. That inventory are consumed as they are what? As they are purchased. It means that when I purchase anything, if I want to consume it, I'll consume the item I first purchased before I move to the next item. That's first in, first out. And it means that what? The value that I'm going to use to consume it, the value I take in an asset will be the same value I'm going to take it out. Then, in now talking about the weighted average average method. Weighted average method says that what? It assumes that all units are issued at the current weighted average cost per unit. It assumes that every inventory issued out per time are always measured at the weighted average cost per unit. If you remember that we did that. That means that what it means that at every point in time, when a new product is brought, when new inventory are purchased, there will be a new weighted average cost per unit. It means that when if I have an item there now, an item is saying that I purchased this 20 and the unit is 10, which means my total cost of asset, value of asset is not, okay, I purchased 20 naira and I have 100 units. So my total value is 20, is not be 100 times 20. That would be 2,000. And I purchase another one. I purchase it at the rate of, let's say, 15 naira. And I purchased 10 items. So 15 times 10 is what? Is 150. It means that I need to generate a new weighted average by picking the total value divided by the total quantity available, so that this amount that will give me, the answer will result to what we call the weighted average cost per unit. So every item I issued out will be issued out on that amount. So these are the two items, these are the two formulas or methods that IAS2 recognize. That's inventory. If you notice, they tested IAS2 as well. I've explained this, and this is another opportunity to what? To remember or to learn. Now that we are done with that question, and that question that we have just treated now is 20 marks question. 20 mark question, and that is question that was released in year 2028 in 2028. So you can look at it. Let me show you. Can you see it here? Let me show you here. So you can download it. Can you see ICAN November 2017? Okay, this is 2017. ICAN November 2017 question 6. So the one that we want to do now is what? Is ICAN November 2018 question 4. Question 4. That's the one we want to look into now to see how it is being solved. Okay. So let's look at question 2. Let's look at question 2 after I fast spent. Time was just running. Okay. Now question 2 says that, can you see? That also is what is testing IAS 16. So what it's just saying, asking us is to divine depreciation. What do you understand by depreciation? 2.5 mark. Very easy for you to what? To get your mark. 2.5 mark. At least if you cannot get 2.5, there's nothing stopping you from getting 2.5. But even if you cannot get 2.5, you'll be able to get 2, at least 2 marks. So what is depreciation? Like I do explain, I do divine it over and over again whenever I mention or I start this topic. Depreciation is the systematic allocation of the depreciable amount of the item or what of the PPE over its estimated useful life. It means that depreciation, it is the systematic allocation of the depreciable amount, and depreciation amount of what? Of an item of PPE over its estimated useful life. Thematic allocation. I want to break it down for you now. Definition. If you want to look at the what definition of depreciation, what is definition of depreciation? Oh, why am I even depreciating? Okay, I'm trying to take the asset, the cost of the asset over the years of the useful life, so I can expense it over time. So like, okay, that's thematic in nature, because what it allows me, because it's not just a guesswork. It have undergo some analytical review. So I call it what? A systematic allocation of what? Allocating a systematic allocation of depreciable amounts of an item of PPE, that's property, plant, and what, and equipment, over its estimated useful life. So I'm depreciating it over its estimated useful life. So if the estimated useful life is 5 years, it means that I must have a depreciation of 5 years. If the estimated useful life is 10 years, I must have a depreciation of what? Of 10 years. That's what they are talking about. So let's look at B. Question B says that list 5 factors we should take into account in arriving at the depreciation charge on a non-current asset. This question is actually what is straightforward, but in the exam, you might not understand what they're asking for. They are telling you that what are the factors that you look for. If you know the formula of your depreciation, you be what? You at a glance, you tell it that okay, this is what they are looking for. The formula comprises of what? Cost. Before you can know the position, you have to know the cost. Number two, scrap value. That's another factor that you consider. Number three, estimated useful life. Number four, the method of the depreciation itself is actually what? It's actually important as well. Number five, the nature of the what? Of the non-current asset. If the nature, if it to be depreciated or to be amortized, we amortize intangible assets. We depreciate tangible assets. Also, you look at the word legal form. So I've mentioned five now, so I'm just adding more to it. We are looking at the legal form. We are looking of chance to be obsolete. Before you can estimate the estimated useful life, you must look at what you must consider the time that the machine or the equipment will be obsolete. It means that the way technology is going in the next 2 or 3 years, this particular machine will be obsolete, which means that our estimated life should not be no more than 3 years. After 3 years, we need to to revalue if we can still carry this thing in our record at the particular point of time. So these are the things that you consider. That's what they're asking for in that question. List 5 factors which should be taken into account in arriving at the depreciation charge on a non-current asset. Now let's see like question C. Question C says, Mr. Gigolo is a trader who prepares accounts on 31st December each year. The following transaction which agree with regards to non-current asset has taken place. January 3rd, 2015, purchase one office equipment for 2 million. July 5th, 2016, purchase plant and machinery costing what? 500 for 50 million. December 1st, 2016, purchase plant and machinery for 20 million. December 15, 2017, purchase bought office equipment for 1 million. Bank balance as at 1st January 2015 was what? 100 million. Mr. Gigolo maintain his non-current asset at cost. Can you see? It maintain its non-current asset at cost and keep a separate ledger for each type of non-current asset. All assets are purchased and are paid for immediately. So there's no credit purchase. Everything was purchased using cash. Please give me a minute. Let me take some water. The throat is dry. Sorry, Jerry. I need to take and when a vehicle is moving, is on motion, they get a particular point, you have to refill it. If you refuse to refill it, it will what? It will stop you. You say, okay, we now show who have the power. So if I don't take the water now, I may not finish the lecture. But thank God, I've refilled. So I've given the throat what is needed. So let's now solve the question. The first one says, prepare plant and machinery account, 1 mark. 1 mark. They are looking for ways to dash you mark, to what? To make you pass. Let's okay, prepare plant and machinery account. B, prepare office equipment account. Office equipment account. Then C, that's 3, prepare what we call bank account. So I have to prepare bank account. So I have to prepare number 1, plant and machinery account. Number 2, we are asked to prepare office equipment account. Number 3, we are asked to prepare bank account. So let's prepare. And remember, they said that what? There are non-current assets at cost. They are kept at cost. So let's go on. So we have in the book of Mr. Gigolo, the first thing you are preparing is what we are preparing plants and machinery account. Now that we are preparing that, so we ask ourselves a question. What is the question we have? We ask the question. Do we have any balance brought forward? Is there any balance brought forward? So we look at it to look if there's any balance brought forward. Mr. Gigolo, okay, no balance brought forward. Okay, so since there's no balance brought forward, we move on to the next. Okay, the next one that we have there is the transaction that occurred during the year on non-current asset is that a purchase office equipment. Office equipment is not plant and machinery, so we're not going to use that now. The second one is that a purchase was plant and machinery. So a purchase for 2016, so we put here. Here, which year are we going on? 2016. So put here 2016. So he purchased an asset, and they said that what he normally purchased using what he purchased in cash. It means that there's no credit, which means the second leg bank is giving, and asset is receiving. So we have what is the date? The date says July 5th. What is the word bank? So we what debit bank? No, this plant and machinery is receiving. So we debit the receiver, we credit the giver, which is bank. So, but on here we are showing bank because we want that anytime we are looking for the second leg will be found in a bank account. So what is our figure? Let's put this in thousands so it will be easier for us. Let's put this in thousands. So now that we have it in thousand, so bank we purchase that's 50,000. The second one, do we have okay? Yes, December 1st also he purchased, and remember he normally keeps his account to what, to 31st December. This is what they are saying. He normally keeps it to what, to 31st December of each year. So which means that this transaction December also can still be recorded in the same year. So we now have this one to be December 1st. Also, bank is giving. What is the amount? The amount there is 20,000. 20,000. Any other plant and machinery? No, no other plant and machinery. So we come back. So we come here and put what you know as. Okay. So we put balance. Carry down. And that's the addition of what, 50 and 20, and that gives us 70. So now that we have that to be 70, so we now close it up. So let's close it up. So now this one will now be 70,000. This one also will be 70,000. So now that this one will now be what? Since we have our balance brought down. So for year 2017, we now have it to be balance brought down. Balance brought forward to what? To be balance brought forward to be 70,000. Let me close this. Okay, let me just do some line here. Okay, let's do that. Okay, so we have that. Okay, now we have prepared what? We have prepared the plant and machinery account. The other one said that we should prepare office equipment account. So now let's prepare office equipment account. So if we are preparing office equipment account, it means that every transaction that relates to office equipment, there is an asset as well. It will be recorded under the. So the first question is, do we have any balance brought forward? Any balance brought forward? No balance brought forward. So we start and record it. So the first transaction that we have there is year 2015. So we have year 2015. So we come back here and put January. So put there 2015 here. So we have 2015 first. So every transaction that we enter there is for 2015. So we have, let's look at the question. January 3rd, 2000. Okay, January 3rd, 2000. So let's make this 1,000. Let's make this 1,000. So we have January 3rd, bank, that's 2,000. So we move on again. Do we have any office equipment again? Any office equipment? Yes, we have another one. That's December. We have office equipment to be in December 2017. So since we have it in December 2017, we need to close up. So we need to close up the asset, the one that we have, and then we have it to be 1,000, right? So we close it up. So we now come back here and put balance. Balance carried down. What is the amount there? 2,000. So we need to close it up. So let's close that up. So 2,000. So we have 2,000 here. So now we have closed for the year, right? So we have closed for the year. So we next one is we have to what 2016. Do we have for 2016? So we open for 2016. So let's open for 2016. So 2016, we open for 2016. So we now have balance. Balance brought forward. So what is the amount? We have it to be 2,000, right? So there's no transaction for what? There's no transaction for balance. Okay, so we are here. So like I said, now the next thing for us now to do is to now open for 2016. So let's open for 2016. So this one will now be your balance carried down as well. Balance carried down. So we have balance carried down to be 2,000. So we have to close for that one also, since we don't have any transaction. So we close it off for 2016. Then after that, we now bring in balance. We build to now be 2017. So we have the balance carried down as well. Balance carried down, and the balance carried down will now be brought forward rather. That will be give us 2,000. Now, do we have any transaction for the year that comprises of? Do you have any transaction that comprises of office furniture 2017? Yes, we do. Let's look at it. 2017, in what? In December 15, 2017, we purchased an item of 1 million for office equipment. So we come back and say, okay, December 15, 2017. So we have this to be December 15, bank. What is the amount? Is what? Is 1 million. So we have done that. So since there's no figure here, so we have the balance carried down. Balance carried down to be 3,000. So we need the addition of that and that. So after we have that, so we need to close by. So this will be 3,000. This is 3,000. While the other one also will be 3,000. The addition. What we have done here is that what we have prepared for the office equipment. And if you look at the mark attached to it, let's look at the mark attached to it. The mark attached to it is 3 marks. 3 marks. It means that on each year have its own mark. 2015, 2016, 2017. They have their own mark. They have their mark like that. So that is the formation that you need to know on that question. So let's look at the last question. Let's look at the last one. It says that prepare bank account. So we are required to prepare a bank account. So let's prepare the bank account. Okay, so let's have our bank account here. So we have our bank account. And I said that anytime you are preparing an account, the first thing you have to come to your mind is, do we have an open balance? So let's look at our bank account. Do we have any open balance? Yes. Yes, we do. They give us bank balance. Can you see? It was January 2015. So we start with year 2015. So we have year 2015 first. So we come back here and put 2015 here. So we put 2015 here. 2015 here. So we have balance go forward, and it's what is 100 million. 100 billion. So you now look at what are the transactions that occur that have affected your bank. What are the transactions that occur that have irrespective, either is plant and machinery or office equipment, it will surely show in your bank account. So you can, okay, what is the transaction here? You look at the transaction on a yearly basis. Okay, let's look at 2015. 2015 office equipment. Yes, office equipment of 2 million. So we go to Jan, okay? So we have 215 year of 2 million office equipment. So we are reducing it. And if we want to reduce it, I've told you that anytime you want to reduce, the next thing for you to what? To just, next thing is to credit it. So we have this to be office equipment. So we put office equipment here. Sorry, office equipment. And what is the amount of the office equipment is 2. The amount is 2 million. So we have a 2 million. So let's put the naira in thousands. Let's put the naira in thousands. Okay. Now no other activities in that. So we do what? We do our balance. We do our balance. We do our balance carried down at the end of the year. And our balance carried down at the end of the year will give us a total sum of let's say that's 98,000. 98,000. So if we add this together, it give us 100,000. This one also will give us 100,000. So after that, we now bring that balance brought forward. So we have that to be brought forward. So let's have this brought forward. So what is that? Okay, that will be on 98,000. The balance of the previous year will be brought forward to this year. So we now look at any other transaction. Whether the other transaction we have no transaction. Are you sure? You know, we have transaction. We have transaction on plant and machinery first. We look at year, it is year 2016. So we are preparing for year 2016 year. So let's do, okay, let me do something like this. Okay, so this is 2017, 2016, rather. So any transaction for 2016, let's see. 2016, yes, we have that. So we have plant and machinery. The 2 plant and machinery was purchased in year 2016. So, and they are both 50 and so 20. So we come back here and put plant and machinery. So we put plant and machinery. Plant and machinery. So we have that to be what? 50,000. Then after that, we have another one to be what? The other one was bought that year at the same media plant machinery. So we have that to be 20,000. Now that we have this 7,000, this 98,000. So we need to balance it. So the balance here now, the balance carried down will now be a total sum of what? 28,000. That is the balancing figure. So we have that. So we can easily go ahead and put the figure here. So this one will now be 98,000. If you have it here, this one also be 98,000. Now that we have the 2 together, the next one is now to do for the following year. To do for the following year as well. So let's do for the following year. Okay. Okay, so Okay, so we are doing for year 2017 now. Okay, so let's do for year 2017. We have the balance brought forward. The balance brought forward is what? Is 28,000. So any transaction for 2017, yes, we have transaction for 2017. The transaction for 2017 is for the office equipment. So we have the office equipment here. Office equipment here. And what is the office equipment amount they have given to us is 1 million. So we have it to be 1 million. So the balancing figure, that's balance carried down. The balance carried down will now be 27,000. So now addition of these two will now be 28,000. 28,000. That's addition of the two will give us 28,000. So it means that what we have done for the year 2017, since there's no information on 2018 to it, so this will be the end of our bank statement. It will be the end of their bank statement. So now that we are done with that, so we have the next thing for us to now bring it down. So with a point, this is a point on its own. Balance brought forward, and that will be what 27,000. So we are what? Since there's no further information, you are good to go. Okay, you are good to go. So you can call it 18. So you're good to go. So this will be the end of today's class. So if you have any questions, so please can send your question. And in the absence of any question, you can use the chat box, or you can just let me know. You can give me a call too, and I will be glad to oblige to you. So thank you for your time, and I want to wish you a lovely, happy night rest. See you in the next class. Bye for now.